What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. The markets are halfway closed today. We did, of course, have Bitcoin spot trading. We had oil trading. We had dollar trading, some of the commodities and derivatives, futures markets, but the stock market was closed and there was no trading for U.S. treasuries. But Bitcoin, we still have a ton to talk about. Every Monday, I put out my Bitcoin fundamentals report. So we're going to read through that. I am live streaming on YouTube and Rumble and Telegram. I do this every Monday. So if you're new, welcome. Make sure you hit the like and subscribe button down below. I will be checking comments at least at the end. I try to remember to check them multiple times, but sometimes that falls through the cracks. So, okay, let's get into the report. Sorry, I'm looking for the proper tab here. If I can find it. Okay. So let me go back to the homepage. This is bitcoinandmarkets.com. It's where I put out all my stuff. This morning, I also put out a premium newsletter, Bitcoin's ETF effect on my forecasts and global news. I did a recent blog post here, why a Bitcoin 6102 won't happen. And of course, every week, the fundamentals report comes out. So a lot of stuff comes out for just the free subscribers, but there is ways to support the show as well. So check out bitcoinandmarkets.com. Okay, let's get into the report. I always start off with a meme, and this one just felt right because the launch kind of disappointed, and we're waiting. It's a holiday. Markets are half open, half closed, and we're just kind of waiting around for stuff. So anyway, I used today to be productive, and I hope you guys did as well. But all right, snapshot of Bitcoin weekly trend approval shock. I do feel like there's some shock here in Bitcoin. About a week prior to the approvals, I was talking about how I was feeling anxious, and that's just like my spidey sense from maybe living through a lot of different Bitcoin ETF rejections. But then now the approval has happened, and people are still kind of waiting. The other shoe hasn't dropped, or we haven't had a big payoff yet. So there is this approval shock going on. We will of course talk about the price and what I think about that. Next thing here in the snapshot is media sentiment. It's still very positive. Of course, there's some FUD going around. There's some lady, I don't know, I think she's just an economist or a talking head for one of the financial press, news outlets, and she was saying that, oh, Bitcoin is infinitely divisible, so it's not scarce, just like Francis Coppola said a couple of years ago. She got destroyed over that. And it's funny because one of the things I commented on was Dylan LeClaire was talking with her on Twitter, and she said that he was being disrespectful, and he wasn't. I mean, he did say LOL at one point, but that's not being disrespectful, really. Um, the it, but she is being disrespectful to Bitcoiners because Bitcoiners know this whole thing, right? We know all about the monetary properties. We know about the benefits of Bitcoin and drawbacks of fiat. We know this, why Bitcoin is pumping, why Bitcoin has had the run it's had. And we put our money where our mouth is. We put skin in the game. I mean, just think, her entire life of investing, I bet Dylan has made more in his, by the age of 22, because he's been investing in Bitcoin. I bet that he has made more returns in his 4 years of his adult life than she has in her adult life. So where is the respect? Where she's the one disrespecting Bitcoiners. So anyway, I tried to point that out to her. I thought it was funny. Okay, network traffic is high, but not very high. We'll take a look, of course, at the mempool here down below. Spending on new equipment is what's going on in the mining industry. We'll talk through an article that is pointing out that miners are starting to think about the halving. They're starting to get prepared for the halving and upgrading their equipment, but we'll read through that. Days until halving now is 93, getting close to that 90 90-day, 3-month mark. Price section. Price is down 42,886, down 4,000 since the last issue last Monday. That's 8%, but this is a dip for ants. We are here. We have been here. We have lived through 80% drawdowns. An 8% drawdown is really nothing, especially when you look forward what's coming with the halving and the supply shock and all that stuff. So, yeah, that's what's going on with price. Market cap is 840 billion. Satoshis per dollar, 23.31. One finny, that brings one finny in at $4.29. That's 1/10,000th of a Bitcoin, right in the middle of the decimal places. We need to get that denomination going. Okay, mining sector. Previous difficulty adjustment was a small 1.6% increase. The next adjustment right now is estimated to be about negative 2% in 4 days. Last week, it was supposed to be negative 4% in 11 days, right? And now it's negative 2. So it's getting a little bit better. We'll take a look at hash rate here down in the mining section. Mempool is down for the first week in a long time. I think it was 550 last week. Now it's down to 527 megabytes. Hold on. I had a feeling I was muted on Telegram. We're good. We're good to go. All right. Back to the report. Okay. Fees to get in the next block. $3.06 when I checked it. That's 51 sats per virtual byte for the average transaction. And I mean, 527 megabytes, but it's only $3. That surprises me a lot. With this high of a mempool, you would expect it to be over $10, I would think, but it's not. Low priority fee is a little bit cheaper, $2.94. Lightning capacity. Now, I've been tracking this for about a year. On each report, in this snapshot, I put the capacity in the channels. This is the biggest drawdown on capacity that I can remember. Negative 3%, 3.6%, down to 44,870 Bitcoins. That's big. That's big. So Lightning is really taking a hit here. I don't know why. I mean, the fees are lower. So people should be able, if the fees are $10, $20, yes, maybe people are waiting to open new channels or waiting to rebalance channels with a on-chain transaction. But with fees at $3, that effect shouldn't be taking place. So I don't know, maybe a big liquidity provider dropped out, something like that. We've talked about that in the past. That's a possibility. But anyway, channels also dropped by almost 1%, 500 channels lower, 58,271. So that's what's going on there in the Lightning Network. Okay, next section is all of my content that I put out. Actually, I'm going to zoom in. Sorry, guys. Probably not too easy to see on the live stream. Okay. I put a lot of my recent content here in case you missed it. This is the member stuff for the premium newsletter that goes out. Podcast version. My last podcast was Why AI Needs Bitcoin. That's an interesting live stream turned into a podcast. So check that out if you haven't. Blog post, like I said, I put out this new Why a Bitcoin 6102 won't happen. I've gotten some good reviews on that and also some tips and stuff like that. So I appreciate everybody that does that. Check that out if you haven't. And my most recent Bitcoin Magazine Pro is what to expect from Bitcoin Spot ETF launch. If you guys are members of that and you read that, please don't forget to give a heart or a like on those posts. I think sometimes people will read it and then they don't give the like. I did have some bad feedback on this one in particular. Somebody called me out saying, because I mentioned the Bank of America multiplier of 118. So for every Bank of America's specific study said for $93 million going into buying Bitcoin moves the market cap 1%. And this guy replied and he said, this is crap. I read the whole thing and it doesn't say that. It doesn't say 118 anywhere. I was like, okay, well, if you take the market cap at the time, you take 1% of that market cap, it was like 10 billion. And then because it was just over $1 trillion market cap at that point, 10 billion, and you divide that by 93 million, you get 118. So I don't know. Maybe maybe that guy will be watching this too, and he can get that feedback. Okay, headlines. I go through some Bitcoin headlines and some macro headlines. So, of course, the headlines are going to be all about the ETF. 1.4 billion of inflows into ETFs in 2 days. It was a record launch with 4 billion in volume on day one. So the previous record for ETF launch was 2 billion, and that one was specifically like rolling over one ETF into another ETF. Like so, um, one ETF product was deprecated and replaced by another one, and they just rolled 2 billion into the new one. So that was the previous record. I think other than that, it's like maybe 1.5 billion in volume on the first day. So Bitcoin blew that out of the water with 4 billion of volume on the first day. Inflows, they steadied, became steady on the second day. They were a little bit up and down on the first day. Of course, the launch, a ton of volume in the first hour, and then it trailed off. But on the second day, it was much more even. All in all, it was a great launch, but it was still disappointing. More on that below. So here's Eric Balkunas. He's just talking about that. Net. So he's taking, if you minus out GBTC's outflows, then you get a net total of 819 million. But remember, uh, a lot of those GBTC outflows are going into the other ETFs. So it's hard to know how exactly to measure that or to weigh that. He has some good stats there. You guys can check that out. Next topic is the SEC Commissioner, Hester Pierce. She pens a scathing statement on Bitcoin ETF approval process. Hester Pierce is a longtime friend of Bitcoin. She's also a friend to the crypto scams, but that's another story. After the approval of the Bitcoin spot ETFs, she ripped into the SEC and the approval process. So I linked to this statement, but I did take some screenshots and want to read these through here, a little bit of these. She says, for example, retail investors could hold it through non-exchange traded products to get some exposure by buying into companies or funds that owned or mined Bitcoin. And in 2021, Bitcoin futures ETFs registered under the 1944 Act started to trade, given the commission had no legal basis for stopping them. In 2022, the commission approved the trading of Bitcoin futures ETFs registered under the 1933 Act. These futures-based products are more complex and more difficult to manage than the spot product, which I was saying at the time, why were these futures products approved and not a spot product? Okay, which can translate into higher costs for investors. In any case, the commission's basis for letting these products trade should have been an equally compelling basis for letting spot products trade. The correlation between the Bitcoin futures prices and the spot prices is high, which means that a regulated futures market is as relevant for a product based on spot Bitcoin as it is for a fund investing in Bitcoin futures. But until a court reminded us that our quote, unexplained discounting of the obvious financial and mathematical relationship between the spot and futures Bitcoin markets, spot and futures markets falls short of the standard of reasoned decision making. Pretty much the court saying, you guys are crazy, man. Why wouldn't you approve a spot if you're approving futures? Uh, but they persisted in denying a spot Bitcoin ETF. The commission, rather than admitting error, offers a weak explanation for its change of heart. In the past, the commission, allowing our prejudice against the underlying asset to get in the way, has rejected applications on the basis that the Bitcoin market was still immature and that there were outstanding manipulation concerns. Today's approval order notes that the commission now finds that means for, quote, preventing fraud and manipulation has been demonstrated because the prices on the CME Bitcoin futures market and the spot Bitcoin market have been highly correlated through the past 2.5 years. We have denied multiple applications over that period, depriving investors of the opportunity to gain exposure to Bitcoin in a more convenient and investor-friendly way. The only material change since we last denied a similar application was a judicial rebuke. That's pretty scathing, if you ask me. Today's order does not undo the many harms created by the disparate treatment of spot Bitcoin products. First, our arbitrary and capricious treatment of applications in this area will continue to harm our reputation far beyond Bitcoin. And I agree. That's one thing I was saying in the pre show here on Telegram. I was saying that this is really going to undermine people's or the SEC's credibility with the investing public. It's a super simple product. Bitcoin is very popular. Why did BlackRock and all of these big wealth managers, why did they push for this? Because they got pressure from their clients, so much pressure that they could not deny them any longer. They had to do this. They had to push it through. So this is a popular product that the SEC was discriminated against in a very illogical way. The courts found against them. I think that people are going to look back on this in a few years and be like, wow, this could be a turning point in people losing confidence in the SEC. I mean, I do think we need to revamp the Securities Act of 1933 because, it's almost 100 years old. A lot has changed, obviously, even the way that we trade things electronically and settlement times and all that. So there needs to be a revamping of this. That might come because the SEC is in court right now, in battle, in the Supreme Court, actually, trying to, they're being accused of having a parallel judicial system. So they have in-house ways that they can fine against people and implement punishments and do all these things. It's in a parallel system. And that's what's in front of the Supreme Court. Is that in accordance with the law? I don't think it is, but, the SEC wants to keep it that way. So maybe that is going to be the kickstart into a rethinking of the entire way the SEC works. It's very interesting. All right, so that's it for Hester Pierce. Let's go on to Gary Gensler. Good old Gary G. I say he's misunderstood, and I'm going to keep hammering this home because I do want him to write a book about this whole process. I think that he was demonized by people, and he really wanted to get this through, and he ended up getting it through. So Gary Gensler is very, very unpopular with crypto bro scammers because he straight up says they are scams and unregistered securities. However, that does not mean Bitcoiners should hate him. He has a positive view on Bitcoin and Satoshi. He's a friend of Bitcoin. Bitcoin has been positioned against the regulatory state, but it shouldn't be. So this gets a little bit more down into my philosophy of Bitcoin, where Bitcoin is anthropomorphized. Is that the word? Given human characteristics and placed against, like a weapon to use against corruption. And it will do that in a certain way because it will make corruption perhaps a little bit harder, a little bit more expensive to do, but it is not correctly seen as directly opposing these things. Okay, I say this is a category error. Yes, Bitcoin makes it more expensive and less efficient to run an overweight bureaucracy, but it's an inanimate tool. It is a category error to place Bitcoin opposed to something made up of many individuals. Those individuals will adapt to a new reality, one with Bitcoin in it, and also one that Bitcoin defines in a way. Like the certain elements are kind of define eras. We had the Stone Age, we had the Bronze Age, we had the Iron Age. Now maybe this is the Silicon Age, whatever you want to call it, the Gunpowder Age or whatever. So this is now the Bitcoin Age. And these people will have to adapt to the new reality. But it's not like bronze, like in the Bronze Age. You wouldn't say like bronze, even though bronze kind of maybe leveled the playing field. Every time a new weapon is created, it kind of levels the playing field a little bit. Then wouldn't say that, oh, bronze is against the state. No, the bronze is an inanimate object, just like Bitcoin is. and Bitcoin can be used for good or evil. Okay, whatever. Maybe I can go into that more later. That being said, Gary Gensler achieved a Herculean task. He got the Bitcoin spot ETFs approved against the wishes of the globalist class in the administration he works for. It turns out he was the deciding vote in a 3-2 approval. And I did write on the last um, fundamentals report that they weren't even going to vote, that this was going to be done through delegated authority, which is what Eric Balkunas and others were saying, other ETF experts. But it turns out that they did vote, and you can find this on their website. I link it in the source down here below. But yeah, Gary Gensler approved, Pierce approved, Crenshaw not approved, Udia, whatever, approved, and this guy not approved. So 3-2, Gensler was the deciding vote, which is very, very interesting. Okay, enough of that debrief of the ETFs. We'll talk about the price effects here down in the price section. But first, we have macro headlines. So US CPI a little hotter than expected, but still headed lower. CPI came out last week and it was slightly higher. Of course, this was met by terrible calls for a reacceleration of inflation and higher for longer. I mean, we're going to see that every time that there's a little, because nothing goes in one direction, straight up or straight down. There's always a random walk along the trend, right? So every time we see a little tick higher in CPI, there's going to be these people, oh, I told you there's reacceleration, inflation is going to stay higher for longer. But that's not the case. Importantly, shelter accounted for more than half of the increase. If we take shelter out, which is counted differently all over the world, month over month, CPI is negative. And here is this chart. Let's blow this up. You can see negative for the last 3 months, it looks like. It was negative back here as well before 2023. But you can obviously tell a difference between 2021 and early 2022 and then this section, right? Obvious difference. All right. Continuing on. This is what I'm going to hear too. Ansel, you're crazy. Shelter is a very important cost to consumers. You just want to take everything out that doesn't agree with your lower inflation calls. I'm not concerned with pointing fingers of blame for past price increases. A lot of people, they don't want to admit that they were wrong, that inflation was going to stay at 7% or 9% and continue going higher and higher and higher. I mean, there are people, obviously gold bugs and other sound money people that don't understand how money printing happens, that they've been waiting for 12 years for the inflation from QE to hit. And then it finally hit and they're like, oh, we're going up 20%, 30%, the dollar's dead. Of course, that's not the case. I don't want to look back at the past and say, use that as a data point. I don't know exactly what I'm trying to say there, but I'm not concerned with this. I'm concerned with figuring out where CPI will go in the future. So these people, they don't even look at their performance in the past on predicting CPI. They just continue making bad predictions. So I'm trying to figure out where CPI is going in the future. And I've been pretty darn accurate over the last few years here on predicting where CPI is going. Shelter is not an independent variable. It does not have a mind of its own. If the rest of the CPI is in contraction, shelter will follow eventually. Also, every jurisdiction counts it differently. Even the PCE and the CPI measure it differently within the United States. Some measures are more dynamic and faster to respond. So what is it that says, oh, the CPI, the way the CPI measures shelter is the correct way to do it or is the most accurate way? It's not. It's different in everything. So let's just take it out. Now, once we take out shelter, now what's the difference here? It's negative. CPI is negative, guys. The CPI shelter component is dominated by owner equivalent rent. We talked about this on Friday, which might be the slowest way to measure it. Homeowners estimate what it would cost to rent their home relative to last month. That in turn is influenced by rents, affordability of a new mortgage. I should have said, and affordability of a new mortgage. So, first, rents have to fall, which they are, and mortgage rates have to fall. Then, owners have to notice that and adjust their OER estimates. That is a slow moving beast. So, let's just take all that out and go less shelter, and we are negative on the CPI. All right. Next macro topic here is this was a great video. Is actually forwarded to me from Murad. If you guys remember him, if you've been in Bitcoin for a long time, you'll remember Murad. This was forwarded to me on a DM saying, "Hey, this guy sounded a lot like you." So I watched it and I was floored. I mean, this is such a great summary presentation of why the Fed doesn't matter, why the Fed is not central. Central banks are not central. So I recommend watching this. Of course, if you are into my content, um, he's going to cover a lot of what I say, but he does it in a kind of from a different angle. He takes it from a portfolio diversification. That's where he starts, and he builds into saying why the Fed doesn't matter and what they actually do. The reason that when they have their monetary policy, why they don't matter is because they actually do the exact opposite. They influence the portfolio managers and risk adjustments and substitutes versus complements in your portfolio. They actually are working exactly counter to what they say they want. So anyway, that's the angle that he takes. Very interesting. One thing he doesn't touch on though is the form of the money. So he does not connect the dots to the form of the money being credit based. The form of the money allowed this system to evolve the way it has. And now it will inevitably go back to the other way to commodity money. And Murad was saying he might be an MMTer, but I don't know. At the end of the video, he kind of does talk about, hey, the Fed should do the opposite and then they'll be more successful. And that doesn't really tell me that you think the Fed doesn't exist. That's the title of the video, is the Fed does not exist. But then he tries to have a policy prescription to do the opposite. So anyway, it's a good video. I recommend you guys checking it out. Okay, next macro headline before we get into price. I think this is the last one. Taiwan elects William Lai president in snub to China. Beijing responds by stressing inevitable reunification. And I link in the bullet point to the story. So William Lai Ching, I don't know, I'm not going to try to pronounce that whole thing, from the governing Democratic Progressive Party, DPP, has emerged victorious in Saturday's historic Taiwan presidential election, and Beijing is not happy, having immediately issued a rebuke after having urged the populace to not vote for him, saying the outcome, quote, will not impede the inevitable trend of China's reunification. Well, okay. Isn't that contradictory? I thought Taiwan was part of China, but now they need to reunify. Maybe there's some loss in translation there, but there's no need to reunify if they're already one country. So they're kind of making themselves look bad. All right. Beijing further claimed that DPP doesn't represent the mainstream public opinion on the island. Despite that, Lai, who serves as the current vice president, has just taken over 40% of votes cast. All right. So he won with a lot. Very comfortable victory and resounding message to China. And also, China was in there playing games as well. So they managed to do this, win this election, despite the overwhelming opposition from China itself, a well-funded opposition, and they still won in a comfortable victory. So I thought that was awesome. We will see what happens from this. I don't think that China is in any hurry to do any sort of military operations. They might up the heat and do more kind of drills around the island, maybe launch missiles kind of a tangent to Taiwan or something, turn up the heat, but I don't think they'll actually go in and invade Taiwan or anything of that nature. And this, if you put this off for another 2 years, another 4 years, what is going to be the state of the Chinese economy? Probably not very good. Every year that goes by, their population shrinks, their demographics get worse, their economy is going to start coming apart. So the longer, if you can put this off for another 4 years, I don't know how long these presidential terms are over there in Taiwan, but let's say it's 2 to 4 years. That's going to be a completely different story. This is the moment, or maybe last year was the moment that China was the strongest possible to invade Taiwan. Every year from now on, they get weaker and weaker. That's my opinion. So, all right, that's all for the macro. Let's get into some price analysis. So we've had 2 trading days in the spot Bitcoin ETF era, and we don't have transparent data. That is the big takeaway for me of the last week. Stark difference between modern Bitcoin and modern Bitcoin exchanges and Tradfi. I wrote about this situation extensively on today's Proton. Professional tier members can check that out. It will likely take another week or two to get the internal processes of the ETFs smoothed out and the buying pressure to be represented in price. They also, went out and bought some before this whole thing. They sourced some Bitcoin early. That was one way that it was priced in. And so this first week or two is going to be just using that already acquired Bitcoin and from the market makers and turning it into ETF shares. So there is that going on. Of course, that made me start thinking about, hey, was this priced in? So as for being priced in, I have a few words about that. And this is a long running argument between, I would say, Austrian school economists, and the efficient market hypothesis economists. And on this particular debate, I fall on the side of the Austrians. I think some things can be priced in, but of course, not all. If I had to say where I fall on the EMH, inside the EMH school, I would say I'm very weak EMH. I talked about the difference between strong and weak. So strong is everything possible that anybody ever thinks about in their mind that they don't even know they think about is priced in. And then there's weak EMH, where it's like only publicly available information. I would say it's even weaker than weak EMH. And let me go into that. So there is confusion over exactly what is priced in. A 95% chance of approval and a 5% chance of rejection can be priced in. You can hedge. There was a lot of hedging going on the futures, CME futures and stuff like that. Estimates of flows can be priced in along with the 95% confidence level. So you can't estimate flows with 100% confidence. 95% is like the highest here. It's the upper bound. Estimates of GBTC selling versus other ETFs buying can be priced in or estimated. The estimates can be priced in, right? Not the actual truth that happens. Notice these are all estimates based on a confidence level. So that's what can be priced in. Estimates based on a confidence level. What can't be priced in is the short or long-term effects on market dynamics, portfolio construction, supply and demand dynamics, etc. Those are just the known unknowns. There are also the unknown unknowns. Those cannot be priced in. All that said, I'll concede that a 95% confidence level for approval was priced in, but the after effects are still not. Okay, so that was my little rant on being priced in. Now let's get to the charts. Price performance was disappointing after the ETF launch, but we are hodlers. This is a dip for ants. We've been forged in the fire of 20% dips and 80% drawdowns, right? There was some damage done to the daily chart with MACD crossing bearish and RSI resetting to the midline. We'll cover that in the chart below. Price also crossed below the 50-day moving average, which signals near-term bearishness. However, horizontal support at 40,000 did hold so far, and oscillators need to be bearish to cross back bullish. So it's not the end of the world to reset the oscillators. That's pretty much what has happened. Let's take a look at the chart. 50-day moving average in blue, we had dropped below that. Now, by the time of writing today, this had popped back above the 50-day moving average. You can see RSI here is under the midline, so that's not a super bullish position. And then, of course, the MACD is crossed bearishly. Let's go and take a look at the live price. How about that? So right now, we have the 50-day moving average is at 42,686. And the price is at 42,825. So it is still slightly above the 50-day moving average, but that would not be good if it closed below that. I think if it closed below that, we'd probably test 40,000 again. But overall, it just fell right back in line to where it was at the end of the year. You know, it's not that much damage at all going on the chart. Okay, let's go back to the report. All right, what else do I say? Things to consider over the next week. Because, you know, I did write this morning the professional tier newsletter that went all into this price and went all into my forecasts and stuff. But I just wanted to give a quick thing of what you can be looking at in the charts and what you can be looking at in the news, like that would be directly reflected in price. So that would be GBTC outflows should not be considered net selling. They're likely rolling over to lower fee ETFs. That's the first thing to keep in your mind. Number two, the premium on CME futures has also closed completely. Some analysts were saying that people were playing the approval by going long in the futures, and now they have to unwind those positions. When we look back in Bitcoin bull market history, when the CME futures dips below spot, it typically happens before the next leg of the rally. And let's go look at that real quick, actually. So share this tab. I'm going to make this a line. I'm going to get rid of this and bring up the CME. So it's kind of hard to see exactly. And we don't have, they're not open today yet. So we just have this last Friday price. But it was above this whole move pretty much. It was above the spot price. And now it's dipping down. And I wonder if, I'm just going to Google this real quick. Okay, holiday schedule. Let's see if I can find this. It's loading. I just want to see when they open. I think they might open at 6 p.m. Still loading. I don't know why it's still loading. Anyway, I'll check on that later and post it in Telegram. Okay, where was I on the chart? Okay, but let's say that these futures get unwound, you know, and so then there is actually a discount to Bitcoin futures on the CME. Where else can we see things like that? Well, if we go back here in time, you can see back here, there was definitely a little discount. The orange peaked out below. How can I make this bigger? Hold on a second. That was back at the end of Q1 last year, or the end of Q1 banking crisis in March. Dipped below for a couple days, and that was the bottom. Let's go back some more. FTX, that was the bottom. So what I'm trying to say is that it is more common to see the CME futures dip below spot at the bottoms, not at like the tops. So if that is the case, this is just another time where we're going to see uh, Bitcoin have a little consolidation here after this big event, and then continues to go higher. All right, enough of that. Share this tab. And lastly, things to watch over the next week is the constant buying pressure from the ETFs over the next month will eventually tip the scales radically bullish. In the build up to the ETFs, gains happened in relatively short windows. We should not be surprised. With brief periods of rapid appreciation followed by periods of calm. So if we go back to the chart, now I'm doing a lot of bouncing back and forth here, but and let's go candles and let's go weekly. I mean, you can see from the bottom back in the FTX bottom, most of the gains happened in very short, brief jumps, right? And even here, we've had a big run, but if you look at back here, middle of October, there was a couple big weeks, and then in the end of November, beginning of December, there was a couple big weeks. So we should expect this pattern to probably continue. We'll have big weeks followed by periods of consolidation. That's what I expect going forward. Okay, let's go back to the report. Much more on the market proton, so check that out. Okay, Bitcoin mining headlines. Bitcoin miner outflows hit 6-year highs ahead of halving, sparking mixed signals. Miner outflow has hit a multi-year high as tens of thousands of Bitcoin worth over 1 billion have been sent to exchanges. Crypto quant data shows that the majority of the Bitcoin excuse me, has moved from mining company F2 Pool. And this is obviously a mining pool. Okay, Bradley Park, an analyst at the company, so he's at Crypto Quant, told CoinDesk in a Telegram message that the move is due to miners facing increased costs. Now, I don't think that's exactly correct. They have the hash price has actually come down over the last week and a half. Park pointed to the increased costs of F2 Pool moving to Kazakhstan and the need to upgrade miners to Bitmain's latest Antminer T21 before the halving. So see, they're competitively upgrading before the halving so that they can remain competitive after the halving, which decreases the rewards for mining and thus the per machine yield as the reason for the outflow. So I just included this because I thought it was kind of an interesting thing. A lot of us, including myself, are not really in depth in the mining side, the mining industry, but these types of articles give you a little glimpse on just what miners consider. What kind of problems do they face, crunch points that they face that will affect the way they sell the Bitcoins that they mine. So I think that's important information. Okay, next mining headline. Coinbase MicroStrategy and Bitcoin mining stocks slide amid spot ETF launches. And I'm pretty sure I've talked about this before. A lot of the money that went into mining stocks and MSTR to get exposure to Bitcoin without a spot ETF, a lot of that demand now is going to go into the ETF. They're going to sell MSTR and go into a Bitcoin ETF. They're going to sell Marathon or Riot and go into these Bitcoin ETFs. So we should see quite a big. They will become uncorrelated here for the next little while. I mean, they will get correlated again eventually, but I would say over the next maybe quarter, you should expect the spot Bitcoin to way outperform any of these other stocks. But let's get into a little bit more here. The stocks have risen significantly over the past year, gaining up to 300%. I think they ended the year 220% up, with investors potentially using the products as a proxy for Bitcoin pre-spot ETF approval. Now that the Bitcoin ETF products have launched, profit taking appears to occur as the narrative draws to a close. However, some are speculating the proxy stocks are now draining into the new spot Bitcoin funds. Bitcoin mining company Riot was the most brutally hit, dropping 15.8% yesterday to $13 a share and down a further 2.6% in pre-market trading, according to TradingView. The stock has gained 137% over the past year, so it's still up. And I put in here, this is the miner ETF that I watch, WGMI, the Valkyrie Bitcoin miner ETF. And you can see the massive sell-off. I mean, the high was up here at 22, and now it's down here at 13. It is running into the 50-day moving average, so we probably will see a little bit of a pause in the sell-off at this point in the chart. But over the next few months, as Bitcoin is going higher, the miners are probably going to struggle, at least on a per share basis, So, okay, that is all the mining headlines. Let's get into difficulty. Difficulty is estimated to adjust downward in 4 days by -2%. Let's bring this up so you can see we did have a negative adjustment back here beginning of December. And then before that, you have to go all the way back to September. Negative adjustments are not unusual in Bitcoin. I've seen big negative adjustments. I think the biggest is around 15%. I think that's correct. But it's rare to see a double-digit negative move. But these small little 1% declines in difficulty, they don't really mean all that much, especially when look at that huge rise that we've had over the last 6 months. Hash rate, we are back up to near all-time highs. You can see it's like a triple top here. So hash rate is coming back. Not that it really went anywhere. There is some weather going on down there in Texas where the cold is putting stress on, I think, some of the power production. I know in the Midwest, I've heard different reports of power companies or whatever requesting to turn your heater down because it's so cold that it's straining the grid. So I don't know how much that's going to affect Texas and Bitcoin miners there. They might have to shut down. That would affect the hash rate. But again, that's temporary. And that doesn't affect their bottom line really either because they get compensated for that. All right, next section here is mempool. Mempool stabilized this week, but fees continued to be relatively low, which is very interesting. I said up top that it was about, what was it? $3 per. Now I'm going to have to go up there again. Where were the? Here it is. Fee $3.06. So fees are low despite the mempool being full. Okay, where are we? Here we are. This could be due to people are done preparing and moving coins around prior to the ETF approval, or inscribers are becoming more patient and lowering their fees. So we did have a higher or lower high in the mempool. Like I said, this is the first time in a long time I can remember week to week that the mempool has gone down. So yeah, looking good. Hopefully it can continue this way. I mean, fees at $3 aren't that bad. So, I mean, there is no real downside right now. It's just really high for the mempool. Okay. Let's talk about some inscriptions. So after 2 weeks of lower numbers of inscriptions, the last 2 days have both been over 400,000 inscriptions per day. A balance might be emerging. Inscriptions go up, causing fees to rise, in turn causing inscriptions to fall, leading to fees falling. So back and forth. Let's take a look at this. This is total inscriptions. You see the huge spike over the last couple of days, over 400,000. We had spent most of the last, I would say, 2 or 3 weeks low down here around 100K, and last 2 days are up to 400,000. But it's still not affecting fees all that much. So maybe, like I say, the inscribers are learning to manage their fees better. Okay. Now, this is the amount of money spent on inscriptions. You see, we way back here, well, not way back here. This is like middle of December, very, very high fees paid by these inscriptions. They're learning how to use their block space properly and their fees properly. And it has been down ever since. A little bit of spike this last week, but overall fees are about $10 million per week. I think, yeah, this is a weekly number. Weekly inscriptions by fee rate. So $10 million a week is about what the inscribers are spending. All right, and that's it, guys. Thanks for hanging out. Let me check the comments here. Dex Invictus back with us. What's up? A dip for ants. Yeah. That's what it was, man. We're forged in fire. We don't care about this. We do not care about a little 8% dip. I mean, it was disappointing. And I had a kind of a adrenaline dump, and I put that on Telegram too. That I think it was Friday or Saturday. I was like, anybody else feeling the adrenaline dump? Because it was just disappointing. And then watching the Tradfi people not being able to tell you what the inflows were, like not being able to tell you the volume, not being able to tell you the inflows. There were some people, even on my Telegram, that were saying they put an order in on Thursday and it got canceled by the next day. It didn't even ever go through to get the ETF, and it's just disappointing for Bitcoin. Disappointing that that is what we deal with. The traditional finance is so crappy, you know. And people like Eric Balkunas and people in TradFi, they don't see any problem with it. I mean, they don't see any problem with not being able to concretely know the inflows 4 days later. 4 days later. I mean, it's insane to think that that's normal. Ah, great stream. Thanks, buddy. Okay, let's check Telegram, see if there's any comments in there. Looking. Hey, someone else says proof of work bookshelf for the office looks fantastic. Thanks, man. Yeah, it's going slow. I have to do another coat of paint pretty much on everything, but I made sure to get this section done first. And then all the other shelves still, they have one coat of paint, but they need at least one more on there. I like it, man. I like having a project to work on. The next one I need to do coming in the spring, I want to move my garden boxes. I have these raised garden beds. I want to move them closer to the house, so I actually go out there more often and maybe start building a chicken coop. I want to get some chickens for the kids. I think that'd be fun. And I've been promising them for a couple of years to get chickens, so I think I need to pull my side of the bargain on that. Daniel says that there is an infinite number between two integers if you just move the decimal point. Yeah, it's crazy, man. How these TradFi people and these ivory tower economists is what I like to call them. Ivory tower economists. They are not going to do well over the next few years adjusting to Bitcoin. So Bitcoin first, came in and it was really bootstrapped by obviously the cypherpunks and the hype, the big people on privacy, the hyper private people. And then it hit the gold bugs because of the sound money nature. Some gold bugs didn't get in, and Bitcoiners were triggering the gold bugs that wouldn't come over. Now Bitcoin has grown to trigger the ivory tower economists, the ones that didn't get involved with Bitcoin last time. So yeah, it's going to be fun watching Bitcoin trigger all these people. Matt G says, highly recommend chickens. Yeah, thanks, man. It's everything I've read about them is they're the easiest kind of introduction to having some sort of livestock animal. We wouldn't be raising them for meat or anything, just to get my kids out there. Make sure you get anti-dig fencing. Oh, absolutely, man. I live in Florida here, and everything wants to eat those chickens. We have foxes. I've seen bobcats. We have bears. We have hawks. We have deer and turkeys, and they're right here in my backyard. So it is definitely need to make it out of that hardware cloth, right? Dig it down quite a ways. Feed my son raw eggs, shakes from raw egg. That reminds me, I showed my kids the Rocky movie when he's doing the raw egg thing, and they couldn't believe it. But yeah, maybe from the backyard, I would do raw eggs. I don't know if I would do raw eggs from like the store or something, but if I'm feeding them, I'm taking care of them. I know they're clean, then I'll probably do a raw egg. Anyway, okay, let's see. Check Telegram one more time. Point up here. Point. He linked to a tweet. He said, "This is his tweet. There's going to be an avalanche of butthurt takes from mainstream investors who missed Bitcoin's first 15 years over the coming days, weeks, and months. It will be glorious." Absolutely, man. Absolutely. That's what I'm talking about. It's going to be incredible. And I like to call people out and say, put some skin in the game. If you're going to be, how do I know that this is even a good faith conversation? Like if they want to FUD Bitcoin and people come in and try to make comments to them or to help them understand, maybe point them in the right direction. Maybe Twitter's not the right platform for that, but let's just say there's some conversation going on. How do I know that they are in good faith if they don't have skin in the game? They need to short it. If they're going to waste my time or waste Bitcoiners' time to dispel FUD, they need to have skin in the game. So I recommend just every time they say something like that, just you gotta say put some skin in the game if you're going to do this, if you're going to be fudding. Okay, last check of the chat. Oh, so the recipe is Matt G says that his recipe tastes good with the raw eggs, syrup, and cream. Very interesting. I'll have to look into that. Yeah, so excited about the chickens. But okay, guys, thanks for joining. Check out bitcoinandmarkets.com. Like, comment, subscribe down below if you're watching this later. Appreciate everyone that hangs out. Appreciate the guys over on Telegram, my main community. You guys cutting it up. I didn't post very much today because I was working on those different posts, but thanks for taking part in the community. Thanks for everyone that supports me over on bitcoinandmarkets.com. And I'll see you guys on the next one. Bye.